Picture this, you wake up tomorrow morning, and your dollar has lost half its purchasing power overnight. Your savings, your salary, your investments all cut in half. Sounds like a nightmare, right? But what if I told you the foundations for exactly this scenario were laid decades ago, and the cracks are finally showing? For 50 years, the United States dollar has enjoyed a privilege no other currency in history has possessed. It wasn't backed by gold. It wasn't backed by productivity alone. It was backed by oil specifically, an agreement that made the dollar the only currency you could use to buy the world's most essential commodity. That agreement just died, and most people have no idea what's coming next. Today, we're diving deep into the petrodollar system, why its collapse matters more than any news headline is telling you, and what it means for your financial future. This isn't conspiracy theory, this is economic reality. So buckle up, because by the end of this video, you'll understand the global financial shift that's happening right now. Let's rewind to 1971. President Nixon has just done the unthinkable. He's taken the United States off the gold standard. For decades, the dollar's value was tied to gold. You could, in theory, exchange your dollars for actual gold. But by 1971, America was printing more money than it had gold to back, largely due to Vietnam War spending. So Nixon severed that link. This created a massive problem. Why would anyone trust the dollar now? What gave it value? Enter Henry Kissinger and the most brilliant or devious, depending on your perspective, financial engineering in modern history. In 1974, the United States struck a deal with Saudi Arabia, the world's largest oil exporter. The deal was simple but profound. Saudi Arabia would sell its oil exclusively in US dollars. In exchange, America would provide military protection, weapons, and political support. This wasn't just a bilateral agreement. Soon, other OPEC nations followed suit. Overnight, the dollar had a new backing: black gold. Every country on earth needed oil. To buy oil, you needed dollars. To get dollars, you had to sell something to America or hold dollar reserves. This created constant, global demand for the US dollar. The implications were staggering. America could now print money with far less consequence than any other nation. When the US government spent beyond its means, it didn't face immediate inflation like other countries would. Instead, those extra dollars were absorbed by the global economy through oil transactions. Other countries had to maintain massive dollar reserves just to keep their economies running. This was the petrodollar system, and it turned the United States into the world's economic hegemon. It allowed America to run persistent trade deficits, finance wars without immediate consequence, and maintain a standard of living partially subsidized by the rest of the world. The dollar wasn't just America's currency, it was the world's reserve currency, and oil was the anchor. But every empire overextends. Every system has its breaking point. For decades, countries chafed under the petrodollar system. Why should they be forced to use dollars? Why should their economies be vulnerable to American monetary policy? When the Federal Reserve raised interest rates, it didn't just affect Americans, it triggered debt crises across emerging markets. When the U.S. printed trillions in quantitative easing, other countries watched their dollar reserves lose purchasing power. The first major crack appeared with the rise of China. By the 2000s, China had become the world's largest oil importer, yet it was forced to conduct these massive transactions in dollars, essentially funding its geopolitical rival. With every barrel purchased, China began exploring alternatives, establishing yuan-denominated oil contracts and bilateral trade agreements that bypassed the dollar entirely. Then came the sanctions. After the 2014 Crimea annexation, the West weaponized the dollar against Russia, cutting major Russian banks off from the SWIFT payment system. Russia got the message loud and clear. Dollar dependence was a vulnerability. Russia accelerated its de-dollarization efforts, dumping treasury bonds and stockpiling gold. The pattern repeated. Iran, Venezuela, and other sanctioned nations were forced to find workarounds. The US had turned the dollar into a weapon, and the rest of the world was building shields. But the real earthquake came recently. In June 2024, the 50-year petrodollar agreement between the United States and Saudi Arabia quietly expired and was not renewed. Saudi Arabia announced it would begin accepting multiple currencies for oil sales: yuan, euros, even digital currencies. This wasn't just symbolic. This was Saudi Arabia, the linchpin of the entire system, declaring independence from dollar exclusivity. The mainstream media barely covered it, but in financial circles, alarm bells were ringing. So what happens now? Why does this matter to you? Sitting at home thousands of miles from oil fields and central banks, Here's the cascade effect. When oil exporting nations no longer need to hold massive dollar reserves, they'll diversify. They'll shift into euros, yuan, gold, and other assets. This means selling U.S. Treasury bonds, lots of them. We're talking hundreds of billions, potentially trillions of dollars flooding back into the market. When demand for treasuries drops, their yields rise. That means the U.S. government faces higher borrowing costs. With America's national debt now exceeding $35 trillion, every percentage point increase in interest rates translates to hundreds of billions in additional annual debt servicing. This creates a vicious cycle. More borrowing leads to more supply of bonds, which further depresses prices and raises yields. Meanwhile, countries that were buying dollars to purchase oil will need fewer dollars. Reduced global dollar demand means downward pressure on the dollar's value. And here's where it hits home. A weaker dollar means everything imported becomes more expensive. Your electronics, your clothing, your fuel, all of it costs more. But it gets worse. America's ability to print money without immediate inflation consequences depended on the petrodollar system. Those extra dollars were absorbed globally. Now they won't be. That means if the government continues its spending habits, inflation becomes a much more immediate and severe threat. We've already seen previews of this. The inflation of 2021 to 2023 was blamed on supply chains and COVID spending. But it was also a symptom of too many dollars chasing the few goods, and less global absorption of those dollars than in previous decades. Some economists argue we're headed for stagflation. Stagnant economic growth combined with high inflation, the nightmare scenario of the 1970s. Others warn of a full currency crisis. If confidence in the dollar erodes rapidly, both scenarios devastate savings, employment, and living standards. Nature abhors a vacuum, and so does the global economy. As the petrodollar system crumbles, alternatives are rushing to fill the void. China has been preparing for this moment for years. The petro-yuan is already a reality, with China buying oil from Russia, Iran, and increasingly Saudi Arabia in yuan. China's Belt and Road Initiative has created a network of dollar-independent trade relationships, spanning Asia, Africa, and beyond. The digital yuan gives China a technological edge in creating a parallel financial system. The BRICS nations Brazil, Russia, India, China, and South Africa, recently expanded to include countries like Saudi Arabia and the UAE, are actively discussing a common currency or payment system. While implementation faces hurdles, the mere discussion represents a fundamental challenge to dollar hegemony. Gold is making a comeback. Central banks worldwide are buying gold at rates not seen in decades. Gold doesn't depend on any government's creditworthiness. It can't be printed. In an era of monetary uncertainty, it's the ultimate neutral reserve asset. Even cryptocurrencies enter the conversation. While volatile and controversial, Bitcoin and other digital assets offer a decentralized alternative to nation-state currencies. Some oil producers are exploring cryptocurrency payments as a hedge against any single currency system. The world isn't moving toward a single replacement for the dollar. It's fracturing into a multipolar currency system. This transition won't be smooth, and historically, such transitions have been accompanied by conflict, economic turmoil, and social upheaval. So here's the bottom line. The petrodollar system that has underpinned American economic dominance for 50 years is dying. This isn't happening next year or in some distant future. It's happening right now. And when it fully unravels, the consequences will touch every aspect of your financial life. Your dollar savings will likely lose purchasing power. Assets denominated in dollars may become less attractive globally. Interest rates could remain elevated for years. The American standard of living, subsidized for decades by the petrodollar, will face a reckoning. But knowledge is power. If you understand what's happening, you can prepare. Diversify your currency exposure. Don't keep everything in dollars. Consider international investments. Tangible assets like real estate and commodities historically preserve value. During currency turmoil, gold and silver have protected wealth through every monetary crisis in human history. Reduce debt, especially variable rate debt, before interest rates climb higher. Build skills and income streams that aren't dependent on dollar strength. Most importantly, stay informed. This is the biggest economic story of our generation, yet it's barely mentioned in mainstream media. The financial establishment has every incentive to downplay the severity of what's happening until it's too late. The petrodollar is dead. The question isn't whether the dollar's global dominance will fade, it's how fast, and whether you'll be prepared when it does. This is a financial earthquake, and the tremors are just beginning. The time to prepare isn't when everyone else finally notices. It's right now. Thanks for watching. If this opened your eyes to what's really happening in the global economy, share it with someone who needs to hear this. And remember, in times of monetary chaos, those who understand the game survive. Those who don't lose everything. The choice is yours.